Morning, friends. How you doing? This is Coach Ernie, and this is the morning market analysis for the Zero DTE service, as well as our tail risk fat tail service on Skool. And today it is Wednesday, July 2nd, a shortened trading week. Tomorrow will be the last day of the week, Thursday, and it will be a short day tomorrow. So what's the big story this week? All week, really, there hasn't been a whole lot of anything else but jobs. Jobs. It's all about jobs. And yesterday we had the JOLTS report that surprised to the upside. Anyways, this morning, all eyes are on the jobs market. And this morning we have the ADP non-farm employment report. And traders are going to be watching that. For every number of clues about tomorrow's all-important non-farm payrolls, or the employment situation report. And that's particularly in light of, like I said, the JOLTS report yesterday. Markets are tense. Volatility is lurking, although it seems to have left the building. It's still there. It's over there in the corner, just waiting to come out. And so every tick could be a trigger for the next big move because of that low liquidity. We're up in the nether regions up there. We made all-time highs last night. Then as the European market opened, it just cut it all off. Are you ready to trade the jobs wave, or will you be caught off guard? Right? This is going to whatever happens today is going to carry into next week. We had Jerome Powell speak. Was it yesterday or Monday? I think it was yesterday. And I don't know if that was testimony or if it was just some sort of conference, but he's giving mixed signals now. And as I reported yesterday, I think that there's going to be some sort of political posturing between, with the administration. I think they need to kind of reduce his overall effect, because really the only effect the Fed has is their narrative, and if you can take that away from them, you take almost all the power. Anyways, the labor market is the heartbeat of this week's macro narrative. Yesterday's JOLT report stunned Wall Street, hinting at unexpected strength in job openings, a sign that the Fed may need to stay hawkish even as other sectors cool. Now, when I say that, I say that with a great deal of cynicism, because the idea that a hot job market is going to increase inflation, again, is one of those narratives that just makes absolutely zero sense. How does a hot job market increase inflation or force the Fed to keep or to stay hawkish? I had to write it because that's basically how they feel. I had to say it. But that's why this morning's ADP release is a must-watch. It's the first in a domino in a chain reaction that could set the tone for Thursday's shortened trading day and Friday and the job situation report. So if all the reports are hot, in other words, there's great news on the employment front, the Fed's stance is that, that's going to cause inflation. I still don't get it. How? Same thing with tariffs. How does tariffs and great economy cause inflation? If anything, it does exactly the opposite. It increases productivity and it brings down inflation. I'm just, I don't know why we have the Fed. It just doesn't make any sense to me. With the VIX. And the VIX is holding steady now in the gamma door zone. In other words, it is now, at least this morning it was in zombie land. Now it's teetering right on the edge. We'll take a look at that in a second. Right at 17 on the VIX. That's our line of demarcation. But because of that, we're looking at opportunity for these fat tail trades, right? The puts are getting a little bit cheaper, although they're surprisingly higher or more expensive than the equivalent distant calls. And that is because the market is looking at, as we go higher and higher like this, there's a greater chance that we're going to pull back. So smart trades can offer massive upside if volatility breaks loose. The real risk here is your complacency and just sort of thinking that, oh, well, everything's going up. My 401k is getting fatter. I feel cool. Nothing really to do. Wrong. This is exactly the time that you need to protect and also take advantage of what could be a nice little windfall simply by putting on some cheap out-of-the-money plays. So too many traders get lulled by quiet sessions just before the storm. So today, I know I really feel like the boy who cried wolf, right? But it's true. Too many traders just get lulled by quiet sessions. Today is about disciplined preparation, setting wide asymmetric structures, letting the numbers play out, and being ready to pivot as macro volatility takes center stage. The opportunity actually is real, but only if you keep your head and trade with a plan. So what is my plan? My plan has basically 3 prongs to it. There's short, medium, and long. In the short term, on a day trading perspective, we're looking at 0 to 1 DTE trades, or our classic out-of-the-money butterfly on a day trading basis. I trade that roughly about 3 times a week. Yesterday was a really good day. Had some good movement in the market. You can get cheap out-of-the-money flies, very close, play super wide. I made 2 very good trades in that regard. Also put on a 3 to 5 day, well, actually not a 3 to 5, couldn't put on a 3 to 5 day trade. I might be able to do that today or even tomorrow for Monday. So that's what I'll probably do. And I call that the convex stack trade. And that's taking advantage of this super low liquidity and the potential for it to drop very quickly. Then I have another trade that goes out a little further that goes just beyond or right at on next Thursday, which I call the Sigma Drift, and that's trying to target the the tariff pause ending on July 9th. So that's how I have it played, with very large, very wide butterflies on the downside, out of the money puts. Just waiting for that thing to break, and it will. The 0 DTE trades keeps us going at a steady clip every day with short-term volatility and the noise. And those medium and longer-term ones, they pay big when we get those existential risks that are going to happen. They happen about 20% of the time, where we totally exceed the expected move, and that's what I'm looking to gain from. All right. So not only are we gaining on the day-to-day movement, but we're also gaining on those moves that most of you lose or miss, that you say, I wish I was in that trade. Well, we're sitting there saying, yep, we were in that trade. And if you'd like to learn how to do that, go down below to the link to our Skool community called skool.com/fattail, excuse me, where you'll learn all about how to trade those tail risk strategies. And on top of that, there's this fantastic AI that will guide you through every step of the way. There's so many benefits to that way of trading. It's really a relaxed way of trading, where we focus on taking super small risk for huge or very large potential returns. And so we're never drawing down. We're just waiting for those existential events, and then our equity climbs. Sorry, I got something in my throat, and I don't think coffee's going to cure it. All right, so let's now do what we're here to do, and that is go to the charts for our 0 DTE outlook. So as you can see, look at that. As I was speaking, we just dropped to below 17 on the VIX. So we're still looking at 20 to 30 wide. I've been playing 30 wide. Some of some of our traders are actually trading 50 wide, and I did do a 50 wide as well. As a matter of fact, I did 2 trades, 0 DTE trades yesterday. I did a 30 and a 50, and both of them came in and made pretty good money. And we're getting these kind of dojo moves, and we're starting to fall into this pattern where the market is moving up mostly overnight. And so we might start looking at going one day out instead of 0 DTE, start playing for the next day. So in fact, today is not a good day to do that because tomorrow is a shortened day. The markets close early, so if anything did happen, I'd have to hope that it happened in the early morning hours of the market. It might still be worth a shot, put on a $25 to $30 trade and see if you can hit a winner. All right, so the directional bias today is definitely up. So we've got 30 to 50 wide. Directional bias is up. That means call flies. And here's the look at that. A lot of volatility. So we made a new all-time high last night, and then right at the European Open, we just gave it all back. And then this morning. So even though we've had, I guess this all kind of cancels each other out. You would think with such a down move that the VIX would be elevated, but it's not. So we're looking at, let's see. Let me just reduce the size of this a bit. Get it out of the way. The volume profile. That's all the profile there is for up in this nether region. There you go. Let's see if we can get it all in there. So I've got to expand this a little bit now. So this is really the node. And then we'll put this right in the crack. See, these are all your levels. Just take your volume profile, and now you've got your support and resistance levels. The top and bottom of the node I mark with a red and a green line, and typically when I'm inside of a node, I usually mark these with a blue line. So that's what I'll do here. And then in the outer cracks, those are yellow lines, but all of those are strong support areas. So anyways, we're looking for a pullback. These vertical lines here represent the morning session. So for our out of the money play, we'll be looking for a pullback into one of these levels, either to here like that, or to here, or any of these, but the edge of a node provides much pretty resilient areas of support. These others are very impactful as well. This is where right here is where I took that trade yesterday. What happened was I entered the first 30 wide trade right here, and then as it pulled back, I entered the 50 wide trade when it came down to here. And they were both way out of the money. This move here, it never actually went into the tent, but that's okay. Ended up being a huge win, about 3 times the risk that I took. So that was a great trade. Yeah, so there we go. That's what we're looking for today. Let's take a look at the bigger picture volume profile. You can see very clearly here we're at all-time highs. This level right here represents very strong support. There's really no volume up here. I mean, it's totally gone. We are in the ether. So this is why I'm talking about these tail risk trades that are looking at way out of the money puts or put flies. Is that and also call flies, because it can easily go up as well. But if we get any kind of impactful news, this will drop very quickly, and that's a long ways to drop. And you can get cheap flies out here, 50, 100 wide for pennies. And if the market comes down there, imagine putting on a $25 trade and the potential of returning $9,000. That's ridiculous, but it's available. And those things can happen very easily. And you can see it like over here in these other places where we made new highs and then came back. Each of these were huge wins for us. Those type of trades. And here, it happens all the time. Look at that. Bam, bam. And these are big winners. Mammoth winners. All right, so that's what we're looking for here. Let's see, where's Tesla's been taking it on the chin. And let's see, pre-market, where are they? At about 302. Yeah, they've been taking it on the chin. The news media continues to pound them for their switch over to their new refreshed Model Y. And so because of that, they had to close down all their factories. They're closing them down again to do another refresh for new models. So their production is way down. Not because demand is down, but production is down. So the news looks at that as as if they're losing market share and so forth, which technically is true. But once they supply the market with their new vehicles, then the market will eat it all up. But they're beating on them. Plus, Trump and Elon Musk are feuding now again over the big, beautiful bill. So that's always good entertainment. Anyways, that's about that. Let's go back to the big head. So, Independence Day coming up, long weekend. I am looking forward to it. We're going to most likely go down to our friends' place. They've got a couple of houses, one both down in Westport, a beautiful one right on the water. Actually, both of them are on the water, to tell you the truth. But we'll probably go down to the beach house and have our traditional lobster fest right on the beach. Maybe I'll have some photos for you. Been doing that for, God, how long have we been doing that? 30-something years? Amazing. Anyways, that's what I'm doing this weekend. I hope you have a great weekend too. Coach Ernie, I am out. See you tomorrow morning.